If you haven't owned a home before, many things can feel like alien territory. That's why First Home Focus, in association with Skipton Building Society, is here to help you all first-time buyers navigate the property minefield. In this episode, we're going to give you a whistle-stop tour of home insurance, which can be a confusing topic if you've never been a property owner before. So here it goes. First, let's look at contents insurance. If you've been renting, you might be familiar with this because you've insured your own belongings. What you might not know is that while contents insurance is not compulsory, it is advisable. And if you have a mortgage, buildings insurance will likely be a condition of your mortgage. Contents insurance covers anything you'd be able to pack up and take with you to your next home. That's clothes, furniture, electricals, pretty much anything that's not attached to the building itself. Most people think of contents insurance to protect themselves in case of burglary or theft, but it also covers damage from fire and flood. As a homeowner, however, you'll also want it to cover not just your personal belongings, but things like furniture, jewellery, bikes, and even garden items. Here's a Phil Spencer top tip. Take pictures of all your belongings and make a note of receipts or valuations in the case of jewellery or valuable items like laptops to make life easier if you need to make a claim. Then there's buildings insurance. This covers damage to the structure of your property, the windows, walls, doors and roof. Think of anything that's a fixed part of your property, and that's what building insurance covers. You generally claim on this if the building was affected by fire, storm or flood. Buildings insurance is compulsory and would form part of your terms and conditions on a mortgage offer. After all, until your mortgage is paid off, the lender has a big stake in the building and wants to know that it's protected should something happen to your home. Insurance tends to be fairly significant annual cost, so it's worth knowing what it won't cover. General wear and tear will unlikely be covered, or damage caused by damp or rust. And unless you specifically add it to your policy, accidental damage may not be covered either. So look out for that as an optional add-on when getting your policy quotes. Other add-ons include home emergency. Some insurers can find you alternative accommodation should you need to move out of your home for a while. Also, while some insurers provide cover for pet damage, the extent of this cover can be limited. So if your pooch has chewed your carpets or infested your home with fleas, it could be that it's you picking up the bill. Insurers won't cover you if you've just been plain careless. If you get burgled because you forgot to lock the doors or set your alarm, your belongings are unlikely to be covered too. Should you be affected by a flood, then it may be that your building's insurance will cover structural damage. But you need contents insurance to replace the carpets, furniture, decorations, etc. Always check the extent of your policy cover, as that may vary from insurer to insurer. And while it may seem unfair, if you live in a high flood risk zone, you may have to buy separate insurance for this too. So do check and always be honest on insurance applications. Japanese knotweed may not be covered either. If you've never heard of this, Japanese knotweed is a triffid-like plant that can grow through pipes, drains and even floors. Even if the knotweed comes from a neighbour's garden, you're unlikely to be covered. And a final word of warning, if you decide to DIY and it goes wrong, that's also unlikely to be covered. So think twice before you decide to do a bit of home plumbing or remodelling. Working out how much to insure for can be tricky. For buildings insurance, you may want to cover the cost of rebuilding your home. That's not the same as a sale price. And for contents, you want to cover the cost of replacing everything in your home if it was all be damaged by fire or flood. Luckily, there are online tools to help, and often insurance websites guide you too. If you want to keep insurance costs down, and let's face it, who doesn't? The first step is to improve your security. Change the locks as soon as you move in. Make sure you've got good modern door and window locks and use them. If you install security lights and a burglar alarm, you could earn a discount from some insurers. And use the comparison sites or an insurance broker to get a range of quotes. While I've talked about some add-ons, and you may well want like accidental damage, you'll often be offered a range of options that may not be necessary for you. So make sure these aren't lumped on without you making an active choice. It might be worth buying a package of both insurances from the same company. Often insurers will offer good discounts for customers who buy both together. While paying out upfront isn't affordable for everyone, do check to see if you'll be charged extra for paying by monthly instalments. And just like car insurance, you can earn no claims discount. Put another way, you'll see your premiums rise if you make a claim, so think carefully before you claim for small amounts. Finally, remember you need to have buildings insurance in place on the day of exchanging contract, not when you complete the purchase. And I'd advise having contents insurance ready and waiting for the day you move, whether you're doing DIY removals or employing a firm who should have their own insurance. Moving is a prime time for things getting damaged or going missing. Make sure you subscribe to get more great tips on every aspect of finding and buying your first home with First Home Focus.
Thanks for joining us on this episode of Move IQ's First Home Focus podcast. We hope you found our tips and advice helpful. And remember, home ownership may be closer than you think, and we are here to support you every step of the way. So please don't forget to subscribe, rate and review our podcast so you never miss an episode. Until next time.